For what it's worth, Matt plans all my soirees. He threw me a little birthday soiree.
When are you going?
That's true. That was delicious.
End of
Red
the
velvet
month.
cake.
End of August.
End of August.
Oh,
Anyone want to come over and pack? Because that's fun.
That's right. Okay. All right. So Kriti Gupta with the reporting here today. A little M&A trade in the luxury Tapestry buying Capri, $8.5 billion transaction. Nice little M&A trade there. We had some big investment banks there getting paid. I like to see that. Looking at the market right here, S&P 500 up 1.2%, a solid move off what is an inflation print, Matt, that I think the Fed can say, hey, whatever we're doing, it's working.
Yeah, I mean, it is working for now. And I think it's always good to remind, well, I'm sure the Fed doesn't need reminding, but it's always good to remember what happened historically with inflation under Arthur Burns. We talk about it so much that I'm sure listeners know, and probably a lot of listeners know more about it than we do. But, you know, once you think you've got it, a lot of times it comes back.
All right, let's head down to Washington, D.C. Amy Morris has got world and national news for us.
All right, thank you, Paul. Wildfires had a devastating effect on the west side of the Hawaiian island of Maui. Bloomberg's Ed Baxter has more.
Lahaina town was Hawaii's first capital. It turned into a place natives and tourists love to visit. Helicopter pilot Richard Olston says it is gone.
It looked like an area that had been bombed in a war.
Owners of businesses on Front Street shutting down their websites, out of business. Power will be a problem for days. Resorts are telling people the reservations up to 2 weeks out to cancel. Lieutenant Governor Sylvia Luke says the process is going to take a long time.
It's going to take weeks and maybe months to assess the food damage.
She says aloha is being shown, though, in relief efforts of the island's Ohana family. In San Francisco, I'm Ed Baxter, Bloomberg Radio.
At least 36 people have died in these fires. President Biden now pledging federal assistance. The U.S. is also sending the FBI to Ecuador to help investigate the assassination of a presidential candidate there. The country's current president is calling the killing of Fernando Villavicencio an assault on democracy. We talked with Bloomberg News senior editor Bill Ferries.
Ecuador is really at quite a turning point here in terms of whether the cartels and organized crime gain the upper hand over the ability of the government to provide any security for its people.
Bloomberg's Bill Ferries was a guest on Bloomberg Daybreak. A conservative legal group wants the Equal Employment Opportunity Commission to investigate Kellogg's over workplace diversity. America First Legal, which is headed up by former Trump administration senior advisor Stephen Miller, says the cereal maker's hiring, training, and promotion practices are designed to achieve a balance based on race and sex, and he says that's against the law. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After a slide the previous session, the mega caps rebounding today. Apple, Microsoft, Tesla leading some of the gains. The boost to the tech shares coming from the Consumer Price Index. It delivered some rather comforting inflation data, we'll say. Fed swaps pricing in slightly lower odds of another rate increase this year after the CPI figures this morning. Meantime, unless the economy really breaks down, economist Bruce Kasman at JP Morgan Securities isn't seeing any rate cuts from the Federal Reserve.
The Fed to cut in the next 6 months, you need a recession. I think the idea of the Fed cutting requires us to have without a recession, requires a fairly decent amount of time. They get comfortable that inflation is moving below 3% on a sustained basis. Probably to get that, they'll also need to see some rise in the unemployment rate. That's not my view of where we're going to be.
Disney shares right now, they are higher, up about 2.3% in the earnings call. They said capital spending and outlays for movies and TV shows coming in lower than expected. So I'm guessing the strike means that they're not spending money.
That's right. Short-term positive
for
cash flow.
How much do they have in terms of content that can keep them going?
Not a lot. You'll start seeing it in the fall when you have some new shows, but anything that's already in process of production can continue. You just can't start new projects. But so we've got a couple of months here, but cash flow positive short-term, really bad long-term.
But by the way, this is where Netflix has an advantage, right? They have more content already in the can,
Plus,
which is an industry
produce,
term, as you know,
look
for
at you.
something that's already recorded and edited.
Already made and everything,
Yes.
ready to be broadcast. Plus, they produce a lot outside the U.S.
Yeah, I was going to say the Korean show, you know, it's just
Yeah.
like whatever that was.
Yeah.
I don't want to editorialize on that show, but it was horrible.
There
well,
you go.
You're in the minority on that. I never saw it, but
Did you like that?
I didn't see it. What do you think?
Everybody
you know
was
what?
just-
I watch lectures from MIT on YouTube.
True.
Reruns of Mannix. John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. I don't know, if I'm the Fed today, I think I'm walking around kind of patting myself on the back here. U.S. core CPI posts smallest back-to-back increases in 2 years. That's pretty good. Underlying inflation measure rose 0.2% in July. Let's put this into context. Lydia Bosor can do that. She's a senior economist at EY Parthenon, and she joins us here. Lydia, what's your take here as you dig into some of the inflation data we got today?
Sure. I mean, the report was encouraging. We saw that back-to-back, the smallest back-to-back increase in core inflation, as you mentioned, since early 2021. We also look at those 3 months annualized trend for both headline and core inflation. And here as well, we saw a significant slowdown. If we dig a little deeper in the component, we are seeing that this inflation in used car prices, which declined in July, and we think that there is more downward pressure coming. And on the housing front, we have also seen a turn in housing inflation, and we're starting to see also some gradual disinflation. So overall, I think it's one more step in the right direction when it comes to inflation.
Can you look at, for example, car prices coming down? Can you look at the credit that's being given out for those kind of loans to help you forecast what's coming? Because I noticed that non-revolving credit actually jumped quite a bit last month after stagnating for a few months, and a huge part of that was car loans. You know, my concern, Lydia, is that these numbers bounce back as the economy continues to do so well.
They do. I think what we've seen in the auto sector has been quite unique. We still have this imbalance between the supply and demand, and that has created some volatility in the sector. So I think, you know, when we look at auction prices, they tend to lead used car prices in the CPI. So I think that we're likely to see more downward pressure, but there's likely to be some volatility as well, as you're pointing out.
All right, Lydia, given what we see on inflation coming down, the Fed appears to be standing pat, maybe one more rate increase. How do you put that all into context with an economic outlook here. Are you guys thinking that there is a recession in the near term? I mean, I know a recession is going to come at some point, but are you in the camp that says it's near term, or can we put this on the back burner a little bit?
Sure. In terms of inflation, I think we're heading in the right direction. I think the Fed will look at these numbers as some convincing progress. When we look at the economic outlook at the same time, we've seen some economic resilience, but we do expect to see softer economic momentum in the second half of the year. So if you look at economic growth, we are anticipating to see growth, flirting with essentially zero heading into 2024. And at the same time, inflation is also likely to remain in that disinflation trend. And overall, that should make the Fed, comfortable enough to stay on the sidelines. And we do think that the Fed has reached the end of its hiking cycle, and that the July rate hike was the last one.
And even if we don't see core inflation continuing to come down, I mean, everyone's kind of taking a victory lap today, but it's still CPI minus food and energy year over year, 4.7%. That's more than twice as much as the Fed wants it to be. So don't they need to at least be seen putting some pressure on, actively driving it down until it gets to 2?
Yes, that's right. The Fed will be very careful. I think that if they do pause in September, they will retain a hawkish bias, and they will keep the door open to further tightening if the data justifies it. The Fed is really data dependent. We're going to get another CPI report in August. We're likely to see some renewed upward pressure on headline inflation. We're also seeing, oil prices rise again, and that's potentially likely to lift headline inflation as well. But we do think that core inflation will continue to ease further towards the end of the year. There's a lot of disinflation baked in on the housing front, and that's likely to pull down core services inflation. And the Fed will be looking at that as some progress towards getting inflation back to their target.
Lydia, so it seems like inflation is, trending in the right direction here in the U.S., but how about Europe? It just seems so much more entrenched there, particularly in the U.K. What do you expect the central banks across Europe to do?
Yeah, I think in Europe, we're seeing inflation dynamics that are still elevated, but we've also started to see some progress. We're seeing very tight labor market conditions in Europe, and that's one factor behind the resilience of inflation. As we look ahead, I think we've seen that slowdown in the pace of tightening also in Europe, and they're likely also to reach the end of their tightening cycle this year. I think when we look at the Fed, it's a little ahead in the cycle. As I said, we're probably at the end of the hiking cycle, and we do see the Fed cutting interest rates likely in March, not before March, but likely next year as they start recalibrating policy.
All right, so the economic picture, though, is different for Europe, right? I mean, here we're looking at still more than 2% GDP growth, and over there, they're already stagnating. Do they hit a recession?
There is a high chance, I think, that we could see some recessions in Europe. We're likely to see, I think, across most advanced economies, economic growth, flirting with full speed growth essentially this year. And so I think that really, when we look at global growth, Europe, U.S. and are likely to be those economies slowing down growth, and we're likely to see global growth slowing this year and then gradually rebound into 2024.
Lydia, 30 seconds. What's your labor forecast here? I mean, are we going to see unemployment go above 4% anytime soon?
Yes, we do have a further softening in the labor market. We think that this gradual rebalancing that we have started to see will continue. So we expect to see a gradual rise in the unemployment rate towards a little above 4% by the middle of next year. And that's going to reflect the fact that labor demand is going to cool further. We're already seeing that happening, and hiring slow down further, as well as we have softer demand and softer economic conditions taking in the economy.
All right, Lydia, that's really, really helpful. We really appreciate checking in with you. Lydia Boussour, senior economist, EY Parthenon is the firm. This is Bloomberg. Let's get some company news right now. Steve Rappaport.
All two luxury goods companies are teaming up in a fashionable alliance. Bloomberg's Jeff Bellinger reports.
Steve, Tapestry, the owner of Coach and Kate Spade New York, will acquire Capri Holdings in an $8.5 billion deal. Capri is the parent of Michael Kors, Jimmy Choo, and Versace. Tapestry will pay $57 per share in cash. That's a 65% premium over Capri's closing price yesterday. Capri shares surged nearly 59% ahead of the bell following that announcement. Luxury giants have been snapping up smaller brands recently, and analysts say the wave of consolidation is likely far from finished. Steve?
Thanks, Jeff. Capri stock is now up 56%, shares of Tapestry down 13%. Germany-based Allianz says second quarter profit jumped more than 7% from a year earlier, boosted by stronger earnings from its insurance business. CFO Giulio Terzariol says there's opportunity to capitalize on insurance to protect countries from natural disasters.
There are some areas where clearly we need to work together with governments in order to make sure that there is affordability of coverage. So definitely there is an opportunity there, but if we don't work with governments, I think there is also a limit to the opportunity that we can seize.
Terzariol speaking this morning on Bloomberg TV. And Amazon issues an ultimatum. Managers are reportedly telling some employees to relocate to a central hub or leave the company. That's according to tech news website The Information, citing an unidentified employee. Staff reportedly must notify managers of their decision by September 15th. Shares of Amazon currently up more than 1%. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets here, the S&P 500 up 0.9%. That's a pretty good benign inflation data. That's the market's attention. NASDAQ up over 1% here. We're keeping an eye on that. Yields, I'll call it the 10-year Treasury, 4.01%, so solidly above 4% there. 2-year note, 4.77%. So we still got the inverted yield curve, but not as much as we had just as recently as a month or two ago. So we'll keep an eye on that as well. Right now, let's head down to Washington, D.C. Amy Morris has got world and national news for us.
All right, thank you, Paul. A 60-day state of emergency is in effect in Ecuador after presidential candidate Fernando Villavicencio was assassinated. The FBI is helping in that investigation. Bloomberg News senior editor Bill Ferry says Villavicencio was known for his crusade against corruption.
Villavicencio has a long history as a journalist going after corruption in Ecuador, particularly during the 2007 to 17 era of President Rafael Correa. He was often on the run, hiding at that time.
Bloomberg's Bill Ferry was a guest on Bloomberg Daybreak. President Biden is taking steps to narrow investment in some Chinese firms. Bloomberg's Nancy Lyons with the latest.
The president has signed an executive order limiting investment in some Chinese semiconductor, quantum computing, and artificial intelligence firms. It's an effort by President Biden to restrict China's ability to develop next-generation military and surveillance technologies. His action follows an intense debate within his administration, with some arguing for faster, more stringent action and others pushing for more limited measures that would take longer to go into effect. Companies have 45 days to comment on the proposal. In Washington, I'm Nancy Lyons, Bloomberg Radio.
Robbie Robertson has died.
Take a load off Fanny. Take a load for free.
Robertson was the guitarist and main songwriter for influential rock group The Band, which broke up in the mid-1970s.
Right on me.
I love that song. Robertson went on to work on the music for more than a dozen Martin Scorsese films, including Killers of the Flower Moon. That's coming out later this year. Robertson reportedly died at home after a long illness. He was 80 years old. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Matt and Paul.
All right, Amy Morris, thank you so much. We appreciate it. All right. Richard Branson, his space thing is moving forward. Virgin Galactic Holdings commenced a flight carrying its first private space tourist, a key step in founder Richard Branson's quest to build a, quote, space line for Earth. Are you going up?
I love this story mainly because of the passengers on the flight.
Yeah.
I heard an interview with all of the passengers on the flight yesterday, and they were so pumped to be doing this. Two of the people who were on it, a mother-daughter team from the Caribbean, they won their seats through a charity drawing.
Really?
Yeah, and the mom is like a total space nut. She has been for her whole life. And so she wins this trip. I mean, imagine a regular person being able to go on something like this. I think the price tag is upwards of $400,000, right, if you pay for it yourself.
Yeah, but you don't really go into space.
All right, well, this one, here we go.
True.
The VSS Unity craft took off underneath the wing of a carrier plane at about 8:30 a.m. local time Thursday in New Mexico. A Virgin Galactic spokesperson said it's expected to reach the edge of space about an hour in flight, at which point the passengers will experience several minutes of weightlessness, that's pretty good, before beginning the descent back to solid ground. So you're right, it's not like...
But that's parabolic flight. And
yeah.
I haven't flown in a while since I had kids, but I will take you up for far less than $400,000, and I guarantee you I can make you weightless.
I don't know if I'd take you up on that, John Tucker.
You put that stick right into the firewall, and you're weightless.
John might be one of those guys. You go down to Jersey Shore and get the little putt-putt planes pulling the ads. That could be John Tucker.
That used to be one of my jobs, putting those things together.
Awesome.
Oh, it was horrible. It
Balls to the wall.
Nightmare.
All right, we'll get back to that. This is Bloomberg. Good morning.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, busy. It is Thursday. That means we check in with Barry Ritholtz. He's the founder of Ritholtz Wealth Management, host of Masters in Business, extraordinarily popular podcast. We're going to talk to him just about the markets and investing. We're going to further break down the CPI print we got today with Adil Zaman, partner at Wall Street Alliance Group. So we'll get some good stuff there. And then the highlight of the morning from Matt Miller, Hannah Elliott, the best job at Bloomberg. She's a staff writer for Bloomberg Business Week, and she's at the Pebble Beach Concours d'Elegance, which I've been to many times. The coolest cars in the world.
I am so jealous. I have never been.
Oh, you've got to go
to Pebble Beach.
They would love you. So we'll set that up for next year. I know some people out there. We'll take care of it. Let's kick this hour off with John Tucker and a Bloomberg Business Flash.
All right, risk-on rally, the Consumer Price Index indicating the rate of inflation slowing from a year ago. So that's providing all the optimism we need right now that the Federal Reserve won't have to remain as aggressive with tight policy. Tesla, Apple, Amazon, Microsoft, Meta, they're leading the charge on the NASDAQ 100. Meantime, Margie Patel at Allspring Global Investments, she was on surveillance earlier today, is among those pushing back against the idea of a recession.
It's very hard to see a recession with unemployment at, say, 3.75% no change looking there. Companies don't need to borrow money. The banks have been restrictive for a number of times. So it's hard to see where this recession is going to come from, not from the real economy. And the economy's been pretty impervious to the Fed's increase in rates.
And among the most actively traded, looking at shares of Tapestry right now, 13%, almost 13% lower. The Coach owner, of course, making a deal for Capri Holdings. S&P 500 right now, 30 points higher. That's up 0.7%. Pairing some of the gains there, 44.98 on the index. The Dow Jones Industrial Average is up 247 points. That's a rise of 0.7%. And the NASDAQ 100, 134 points higher. Again, pairing the gains there, that's up 0.9%. Two-year yield, 3 basis points lower at 4.77. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Do we need to explain what Matt was talking about?
No need. We're all good.
Okay, he was talking about the throttle.
Exactly.
The throttle.
Well, it's
and there are little
throttle,
little knobs
the prop
on top of the
pitch,
throttle,
and the fuel mixture. Those three ball-shaped grips on an aircraft's engine controls. When you push them forward, right? As a pilot.
To the wall.
Yes, exactly.
Yes, that's what we was talking.
I don't even know.
Die on this hill.
Just to be clear.
Yes. Okay. Let's move on to the markets.
We're going to dump this in Jess Metten's lap here. No doubt about it. S&P up 0.7%, off the highs, as John was just reporting here. But some good eco news out there if you're on the inflation front. And also a lot of company-specific news out there. So let's go to Jess Metten. She covers all that stuff for us for Bloomberg News. Jess, what are you looking at?
Gotta say, it never disappoints when I come in with
into
a
the
dynamic duo in this studio. So a couple other names. I know we've been talking a lot about Disney and Capri and Tapestry this morning, but some other big movers. One of them is Yeti. So this is ticker symbol YETI. So this is pretty popular, I would say, in my home state of Texas because this is the maker of, coolers, backpacks. They also have those tumblers. So that stock is up about 22% this morning, and it did report adjusted second quarter earnings that did beat expectations, and then it also raised its full year forecast for its adjusted earnings. Another one that I have to point out is AppLovin. So this is ticker symbol APP, APP. I had to do a double take. I almost thought of McLovin when I first...
I definitely think of McLovin.
When I first saw this. So this is actually a software company based in California. So it has a $13 billion market cap. So that stock is up close to 24% this morning. It did swing to a surprise profit and higher revenue, and it also gave a stronger than expected revenue outlook for this year. And the company did peg that outperformance on a successful rollout of its newest advertising product. And this stock is actually up about 240% this year. So some big moves there. Another one I was taking a look at is also Six Flags, ticker symbol 6. It's down about 3%. This year, and then if you look daily, it's down a little bit more than 1%. So it did actually, it's down about 2%. So it did report revenue for the second quarter that did miss the average analyst estimate, and it has been cutting prices as it looks to basically strike a balance here. Last year, it did raise prices across its ticket and in-park offerings, but cutting costs and basically those pricing earlier this month and this summer, basically trying to get more people to come, but I'm still seeing some issues there. We do have Six Flags in Texas.
They never really had a... Wait, isn't the Six Flags from Texas? Isn't that the Six Flags over Texas?
Right, exactly.
Yeah.
So we have them in San Antonio, outside of Dallas.
That's right. Well, the Six Flags Great Adventure in exit 7A
Jackson, New Jersey.
The New Jersey Turnpike is where you need to go, kids. So why don't you go to Six Flags Great Adventure? Now, you're a bachelor. You could go out there on a Saturday.
Well, I would love to. And actually, now that you say it, I might actually do that on the weekend because I love riding roller coasters. This stock has never really recovered from the pandemic. And you would have thought, people would, after they were allowed out of their houses, go to a place like Six Flags, right? I don't know why it hasn't been popular because definitely people return to Disney parks in droves.
That's a great point. And historically, this has ridden it. I mean, because Comcast owns Universal, the parks there, and they extol the virtues of that part of their business. So I think investors know that the theme park business is a really good business. But I'm just not sure why Six Flags hasn't had a better overall performance.
Also, SeaWorld and then Cedar Fair. So if you take a look at SeaWorld, that SEAS is the ticker. It's up about 1% today, but down about 3% for the year. But both SeaWorld and Cedar Fair, the rivals of Six Flags, did report year-over-year declines in attendance, and a lot of that was just due to a lot of the record-setting heat waves that we've seen this year. So that's been a key issue for when you're looking at some of these attendance numbers. So for Six Flags, attendance rose about 6% in the latest quarter, but those price cuts basically kind of helped stoke a bit of some of the demand there, but just not enough. So maybe some of the heat issues to blame
Cedar
there.
Fair, based in Sandusky, Ohio, Matt.
I love Cedar Point. Grew up going there. We had a boat in the marina, and my dad wanted to sail all day, and the kids wanted to ride the roller coasters.
Sail on what? You got
Lake Erie, buddy.
Ooh.
It's very, very big. Now, hang on. Before we get too far away from Six Flags, Jess, can you name the Six Flags that flew over Texas?
Oh, I mean, putting me on the spot. I can't do that on the spot.
Well, I had to Wikipedia this. Apparently, Spain, obviously. France, you would have thought of that. Mexico, sure. The Republic of Texas.
Didn't know that.
Pretty cool.
Yeah.
The United States, as we know it, and the Confederate States, very briefly, obviously.
Right.
So
there we go.
So Six Flags is a thing.
Yeah.
Oh, yeah.
I didn't know that. Oh, okay.
That's why. Yeah, it's a
Okay,
thing.
well, really? So you learned that in, like, Texas grammar,
We
elementary
have
school.
in 7th grade, and usually through all of Texas, you have to take Texas history. Unfortunately, I forgot some of it clearly since it's been a couple decades
That's
since
awesome.
I took that
Texas
course.
history. I love
but
that. That's
thanks
perfect.
for Matt keeping me honest there.
Well, as long as you don't forget the Alamo,
Of course not. Come on, Davy Crockett.
Yep.
Pee Wee Herman's bike was apparently stored in the basement of the Alamo.
What? Wait, what?
Do you not remember Pee Wee Herman's Big Adventure?
Oh my God.
He was chasing after his bike. Someone had stolen his bike, and
This is
he
why
thought
I
it
love
was.
being here.
Yeah.
I come in with some stocks, and I never know where it's going to take us.
Yeah, we never know. All right, Jess, thank you very much. We'll let you go here. Get back to some serious work. We're going to continue on. Barry Ritholtz joins us. I'm not sure it's going to get any better with Barry here. Barry Ritholtz, he's the founder of Ritholtz Wealth Management, host of Masters in Business, that podcast thing. Barry, lots to chew on here. I don't know if you have anything in terms of Texas history, but what are you looking at in these markets these days? What's getting your attention?
Well, the big thing is whether or not the Fed is going to declare victory and go home, especially after a CPI report like today, or are they hell-bent on causing recession and making everybody in our space unhappy because they're moving away from beating inflation, and as they tend to do, my fear is they're going to go too far.
You know what? Neil Dutta was on this morning. His fear was that they haven't gone far enough. We're still looking at core inflation in terms of CPI at 4.7%, which is more than twice what the Fed wants. So isn't their target 2% on the core?
Well, first of all, we can talk about 2% core inflation. Matt, do you have any idea where that 2% target came from?
No.
None.
All right. Well, most people don't. And in order to know where it came from, you have to read what former Fed Vice Chairman Roger Ferguson wrote not too long ago. He points out that 2% was a random number that originated in New Zealand in the 1980s. It didn't come from an academic study. It was just an offhand comment during a television interview, and everybody else said, yeah, that sounds like a decent number. Let's adopt that. But the fact that
not just the Fed, right? I mean, that's been adopted by central banks around the world. Right. And quite frankly, without sounding too flippant, it doesn't matter where it came from. The fact is, Jerome Powell has stated time and time again that he's going to keep pushing until the Fed gets to 2%, or at least as near as damn it to 2%.
That's the risk factor that, hey, we're going to aim for this random number, even though the entire inflation regime and the entire economic regime has changed. The 2010s were an era of monetary stimulus, of a very anemic post-financial crisis recovery, and we were looking up towards 2% when job creation was kind of soft and consumer spending was weak and GDP was soft. Now, fast forward to the 2020s, we've had a regime change, and it's gone from monetary to $6 trillion plus in fiscal stimulus just in the United States. I'm not talking about other countries' fiscal stimulus. And so you go from an anemic economy to a robust post-lockdown recovery, and 2% is really a silly number. I want to convince the Fed that, hey, maybe you should be looking down at a 3% target. Lawrence Ball is a member of the National Bureau of Economic Research. 2013, he suggested 4%. So this isn't completely out there. People have discussed that the inflation target is just kind of a silly random number. Why is the Fed chair so obsessed with it?
It's clear in their communications that they certainly are. Hey, Barry, we pretty much finished up on this earnings cycle here. Are we in the midst of an earnings recession?
Yeah, that's one of those things that we keep hearing people talk about. Oh, my goodness, look at this horrific earnings recession. And the problem with any given quarter is the tendency to forget the bigger context, forget what came before. I'm not a big fan of going X. Like, I think you have to look at the whole picture, but you can't completely ignore, hey, how do the earnings look without financials? How do the earnings look without energy? And essentially, more than 100+% of the 8% downturn in this quarter's earnings is pure energy. It's just the downfall in energy. Now, remember last year when everything was stinking up the joint in 2022, energy was the only bright spot. You know, when industrials and consumer discretionary and even technology was looking at an energy shortfall, a profit shortfall, energy did great. Whether it was the war in Ukraine or other factors, you know, I'll let the economists debate. But clearly, coming off of that really hot year, now year over year, when we look at energy profits, they're down more than 51%. So back that out, which is really aberrational. You have this giant surge last year and this giant collapse this year. Plus 1.4% is pretty decent. And when we look at quarter over quarter, earnings are up X energy plus 8.3%. That's pretty substantial. Just look at the S&P 500 year over year with energy, and we're up 0.6%. So not the worst sort of thing in terms of revenues. That's 0.6%. So I don't understand why there's all this hand-wringing about a earnings recession. It looks pretty good from where I sit.
Well, so in order for the Fed to keep inflation down with monetary policy, I would have to think you need an earnings recession, or you need to keep earnings growth in check, right? Otherwise, how does raising interest rates only reduce inflation without affecting the rest of the economic picture?
So let's go to your fundamental principle there. In order for the Fed to keep rates down with monetary policy, let me remind everybody, we spent more than a decade with rates about zero, and we had no inflation. If zero rates didn't cause inflation, maybe higher rates isn't how you cure inflation, especially this particular flavor of inflation, which has been caused not just by fiscal policy, but hey, we had a crazy supply chain snarl that finally has been mostly resolved. We have a shortage of single-family homes. We still have problems getting enough semiconductors for cars, and there is undeniably a shortage of labor. I don't see how the Fed raising rates further from here is going to build more houses or get more people into jobs, get more potential employees to be hired. Those are the drivers of the inflation we're seeing.
But
higher
Barry,
rates doesn't affect that.
Isn't, dumping bucket loads of dollars out of helicopters partly responsible? I mean,
yes.
How much fiscal spending was there? Obviously, there wasn't inflation
$6
for the decade
trillion,
of
to
zero
give you a
rates
round
because
number.
we weren't sending $5 trillion out to the American people in cash.
Right. So you had $2 trillion in CARES Act 1, almost another trillion in CARES Act 2, a fourth near trillion in CARES Act 3. So that's what's already coursed its way through the system. That pig is mostly, not fully, but mostly through the python. Looking forward, the Inflation Reduction Act, the Semiconductors Act, the Infrastructure Bill, that's also stimulating, but that's spread out over 10 years. So it's going to be much more modest. And again, another reason to think of 2% as the wrong inflation target, given all of this fiscal stimulus that's in the pipeline, maybe 3% makes more sense.
What are you driving, Barry, today, this weekend?
Well, it looks like it's going to rain here, so the Cabrio is going to stay in the garage. I don't know. It really depends on where we decide we're going to have an office meeting, and depending who shows up and what they've seen, I may, and the possibility of rain, I just may take the all-wheel drive Audi and show up, even though that's really a race car, but you can drive it like a normal car when you
What, that's the R8 that you're talking about?
Yeah, the V8 6-speed gated shifter. It's a fun car. And P.S., one of the things we always tell investors is you have to keep your wits about you when the market is selling off and people are panicking. I picked up that car for a song in March 2020, or maybe it was April 2020, because everybody was freaking out. The thing that investors seem to overlook constantly is, you got to sell them when everyone hates them, and sell them when everyone loves them, and buy them when everyone hates them. Not stocks.
It applies to
I'm
cars
a
too.
long-term holder,
Right.
But cars and other collectibles. There is a very
All right, Barry, we're going to have to leave it there and enjoy your driving. Barry Ritholtz, host of Masters in Business for Bloomberg Radio. This is Bloomberg. Let's go to Steve Rappaport with some company news.
All shares of Disney climbed as much as 3.8% this morning, the stock posting its biggest intraday gain since February. More from Bloomberg's Gina Cervetti.
The company said capital spending and outlays for movies and TV shows are coming in lower than projected. Some of that was due to the writers' strike, but Disney has also been on an aggressive cost-cutting push that's included job cuts. Streaming is still losing money, but less than it was a year ago, and the theme parks business was strong. Disney is raising prices on its ad-free streaming options, Disney Plus and Hulu, by as much as 27%. It also plans to start cracking down on password sharing, as Netflix has done.
Thanks, Gina. Shares of Disney currently up more than 2.75%. Luxury goods maker Capri Holdings stock soars 56% after Tapestry agreed to buy the parent of Michael Kors, Versace, in an $8.5 billion deal. Tapestry, which owns the Coach and Kate Spade brands, will pay $57 per share in cash. The companies expect to close the deal by the end of the year, pending approval by regulators and Capri shareholders. Tapestry stock down more than 12%. U.S. college endowments are rebounding from their worst returns since the Great Recession. Endowments earned a median 8.7% before fees in the 12 months through June. Sounds good, right? But hold on. Increases in costs for buildings, salaries, financial aid, those all cut into the gains. The National Association of College and University Business Officers says colleges need an annual gain of 8.2% to keep the pace with inflation and spending. That figure is up from 7% in 2019. Those are the company stories we're headlining this hour. I'm Steve Rappaport, and this is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Risk on, although we paired a lot of the earlier gains on the major indexes, and it's all because of the core consumer price index, stripping out food and energy costs, rising 0.2% for a second month. So that marks the smallest back-to-back gains in more than 2 years. The cooling may be enough to keep the Fed on the sidelines, and that's the kind of thinking that had pushed the stocks higher. Although, again, as I say, we're all pulling back on the earlier gains. On the earnings front, Disney shares right now, they are up 3%. Analysts welcoming the moves to cut costs of the world's largest entertainment company. And on the earnings front, you have 454 companies in the S&P 500. They have reported so far this period, 57% of those delivering positive earnings growth. Right now, the S&P 500, 24 points higher, up 0.5%, 44 at 92 on the index. Dow Jones Industrial Average, 211 points higher. That's up 0.6. The NASDAQ 100 up 102 points, a rise of 0.7% right now. 2-year yield, 2 basis points lower. That's at 478. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. I'm looking at the various video screens. We got this Virgin Atlantic launch going, this tourism mission, first tours to space, and got some video. Pretty cool. I don't know. I just like this stuff.
I love it.
I think it's pretty neat. So anyway, Virgin Atlantic.
Although Tucker says they're not going into space, it looks pretty dark up there, and I see people floating around.
I guess it's like the edge of space. They get waitlists and all that kind of stuff. So
what would you consider, Tucker? What would you consider a respectable flight to space?
When you're in orbit.
Okay,
he's a space snob. He's a space snob.
It's just like there's some debate over it. I don't think they actually went into quote unquote space.
Yeah, you're like old line Apollo. You want to see that kind of stuff.
Yeah.
All right, let's get back to.
You would like to do that, wouldn't you? Like to be on that flight?
Well, I wouldn't pay anything for it, certainly, but yeah.
Well, we know a guy. We know a guy. Don't worry. We'll take care of that. All right, the markets like what they saw from the inflation print today. Let's check with somebody who actually does this stuff for a living. Adil Zaman. He's a partner for Wall Street Alliance. Joins us live here in our Bloomberg Interactive Broker Studio. Adil, I like the print today. Matt thinks inflation's still too high. I'm a friend of the trend. I like the trends coming down. That's what I'm focusing on. How did you view the CPI print today, and how does that impact kind of how you're thinking about these markets?
So great to be with you. So we were very positive on this print, and you know the Fed waged a war against the 40-year high inflation by raising interest rates to a 22-year high, and it's clear that the Fed has won this war, right? Inflation has come down from around 9% down to around 3.2%. I think this is constructive for the equity markets in the long term.
Are you not concerned that there's a chance it comes back?
Well, what we think is that from this point onwards, the inflation will most likely start to cool off on its own, because even if you look at the unemployment rate, we think that it is understated right now because a lot of the layoffs have been in the tech space. And a lot of those workers are high earners, so they're not necessarily claiming unemployment benefits. And also, you know, the Fed is going to be very careful about not damaging the unemployment rate too much in this politically charged environment. So we think it's going to start to cool off on its own from this point onwards.
I just saw total consumer credit rose $17.8 billion last month. There was a small monthly increase before, so credit had kind of stagnated, but now it's come roaring back, especially student loans and auto loans. And you know, if people are able to weather 7 or 8% auto loans and are still willing to go pay these incredibly high prices for vehicles, I feel like you know, they could push inflation higher. They could bounce it back up.
Fair point, but I also feel that, you know, at some point, this excess savings that people have from the pandemic, they're going to run out of it. And when they run out of it, you know, they'll start cutting back on some of the services, right? So they'll stop going to Bloomingdale's and they'll start going to Costco, right? So they'll become more budget conscious, and I think that will also start to bring inflation down, and the data is supporting that.
All right, so given that backdrop, Adil, a benign inflation outlook, still decent economic growth, although slower than what we've seen, what do you do here? Are you equities, fixed income? Where do you start?
Well, fixed income is also very attractive over here, but if we take a longer term point of view, I think equities is where you get the most bang for your buck. We are of the school of thought that we think in the short term you're going to get a correction in the market because seasonally this is a weak period of the year. So on the equity side, we would be looking at opportunities on a pullback. The two parts of the market that we like over here is the high quality momentum areas and then the less loved stocks that haven't participated in the rally so far. So we would be looking at opportunistically on those areas on a pullback.
All right, so is that the Metas of the world, the Googles of the world, the Amazons? You'd buy them on a pullback, or kind of what's that first group for you?
Yes, so that would be certainly that's one group of stocks. The stocks on our watch list, for example, Apple and Meta.
Okay.
You know, Apple just came out with their earnings. The street did not like it because the iPhone sales went down. But we actually saw strength over there because we saw their service business grow, which is, you know, the profit margins are almost double that of the product business. So those are the type of areas that we would be very interested in on a pullback.
What do you think about, I mean, rates at this level, you're going to want to lock those in. Don't you think that a lot of people are going to want to lock in 4%, 10 years?
Yes, actually, we have a lot of clients that have cash that are looking to lock in good rates. So certainly, I think that's in the short term, that is going to be a headwind in the market. But I think that in the long term, you get better risk-adjusted returns on the equities.
All right, so, I mean, Matt's been overweight, you know, those Magnificent Seven, me not so much. So if I'm looking for this market to kind of broaden out a little bit, because I think I need to see that for just the health of the market, if I don't own the Magnificent Seven, if I don't want to go chase those things, where do I go?
Yes.
Or should I take profits and get in?
You let it ride. Just let it ride.
Well, I agree with you completely. Like, if you look at the S&P 500 up until the end of last month, it was up about 19.6%. You look at the equal weight index, it was up about 9.6%. So I would be looking at some of the less loved stocks. Like, for example, another stock on our watch list is Home Depot. Right, so Home Depot did really well during the pandemic because we were trapped in our homes and we just wanted to improve our living experience. Since then, the demand has subsided, but we still see a great long-term potential because in the US, we have a housing shortage and people do have to upgrade their homes, which benefits a company like Home Depot.
And you own Home Depot. You also own Apple. I feel like the market has soured a bit. Well, clearly they've come down below the $3 trillion value, and we see iPhone sales stagnating. Why do you own Apple longer term?
So we think that, you know, the service business, there's a lot of strength over there. So we like that. And then also we think that the iPhone 15 release could be a significant upgrade. You know, the quality of our phones are improving. So we are holding on to our phones longer before we upgrading it. So I think this upcoming release of iPhone 15 could be a good catalyst. So, and company pays a good dividend. So
I just don't know what's going to change. The phones that Paul and I have are already capable of everything we need to do.
I got an iPhone 11.
Yeah.
That's what I got. I might upgrade, though. I'm going to take you to task on this Apple. Every time I see Tim Cook, I say, you got to raise your dividend. You got a dividend less than 1%. Man up, go to 3%, 3.5%. Are you surprised that they don't do that with all the cash they have on the balance sheet, all the free cash flow they have? Don't you think that they should raise their dividend?
Well, yeah, I mean, they're entering into a different phase of the business, and I think they are doing great with the share buybacks. And I think, you know, I think they have a lot more going on for them in other areas, which they want to keep their cash to take advantage of.
How about energy? You know, there's a sector that for a decade nobody cared about because, you know, it was peak oil and we're all going green. And then it's had a nice 3 years here. And now we've got WTI crude oil, you know, back up at almost $84 a barrel. Do you guys traffic in the energy space at all?
We actually think oil is headed higher because, because, you know, the demand for oil, as the global economies grow, the demand for oil is going to continue to increase, and OPEC is going to continue to limit production, and the transition away from fossil fuels is going to take a lot of time. So we actually think that the oil inflation is here to stay, and that will keep going higher. And that benefits some of the larger oil players because their break-even on oil is very low. And with oil at $100 a barrel, they're making a killing.
Adil, does China play into your investment thesis?
Certainly, China is a major player, and it does have an impact. But we find opportunities more domestically in the United States, and especially.
I just mean in that they, their economy supports rising prices of oil if it does well.
Yes, so China is definitely a key player there. Global economies, India is a key player, and the U.S. also. The U.S. economy is improving, so that's also increasing the demand for oil. So definitely, we really like some of the larger oil companies that benefit from that.
30 seconds. What are you staying away from here?
I think that there's a lot of quality investments right now that you can take advantage of. So I would stay away from the high risk, volatile, meme type of investments and just focus more on quality and look at it in pullbacks. And like you said, fixed income is giving you also an opportunity of a lifetime. 1 year T-bill, you're looking at close to 5%.
Yeah.
We've never seen that in a long time.
Yeah, it's just amazing. I know people that just roll those things over all the time. Adil Zaman, he's a partner at Wall Street Alliance. We appreciate you coming in here live to our Bloomberg Interactive Brokers studio. Good stuff there. Looking at these markets, kind of giving up some of their gains. Still positive. We got the S&P up about 0.7%. Same for the Dow. NASDAQ, same there. So kind of a broad move here off of what was a fairly, I guess, in-line inflation data. And for those that feel like in-line is okay, that's enough for this Fed to maybe step back a little bit from the rate rise. There you go. There's all the information you need. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. Wildfires in Hawaii took residents of Maui by surprise as they raced to escape their homes, some diving into the ocean to get away from the fast-moving fires. At least 36 people have died. The governor has declared a state of emergency. The White House is pledging federal assistance. There's a new plan to push conservative voters to embrace mail-in voting in drop boxes in the 2024 election. It is a shift for the Republican Party, as Bloomberg's Nancy Lyons explains.
Back in 2020, then President Trump railed against the new methods of voting that many states were adopting due to COVID-19.
I think that mail-in voting is a terrible thing. I think if you vote, you should go. And even the concept of early voting is not the greatest.
But now Trump's allies are embracing those tactics, with his former acting Attorney General Matthew Whitaker leading an effort to encourage conservatives to cast ballots by any legal means. They even plan focus groups to test messaging and its impact on voter behavior. In Washington, I'm Nancy Lyons, Bloomberg Radio.
President Biden promoted the clean energy manufacturing boom during a stop in Albuquerque, New Mexico, at a plant that makes towers for wind turbines. His visit was part of an effort to promote the economy a year since he signed the Inflation Reduction Act, and he told workers that inflation's down, so is employment, and Bidenomics is working.
Where is it written that America can't lead the world again in manufacturing? Because we're going to do just that. The leading manufacturer in the world.
The president says Bidenomics is all about growing the economy from the middle out, not the top down. New York City apartment rents hitting new highs in July, even as there were signs that prospective tenants pulled back from the market. Prices on new leases signed last month set records. Landlords are pushing the rent limits. They're finding some are still willing to pay. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries.
markets.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. All 11 major industry groups in the S&P 500 are higher right now. Communication services, consumer discretionary leading the way. The tamer than expected consumer price index that's led to betting the Fed's on hold, especially good for technology. You have Amazon up 1%, Apple up about 0.5%, Meta was up over 1%. Meantime, Jennifer Lee, managing partner at BMO, Nesbitt Burns, says one data point probably not going to move the needle for the Federal Reserve.
I don't think it's going to change the narrative too much for September. I still think there are a lot of question marks, a lot of things that have to be answered before they make their September 20th decision.
We did have Fed speak today. The Federal Reserve Bank of San Francisco, Mary Daly, saying the U.S. Central Bank has more work to do to control inflation, even as we got that data. S&P 500 up 33, the Dow up 256, NASDAQ 100, 143 points higher. That's back up about a 1% rise. Two-year yield down 2 basis points, 477. Everything's big in Texas. The chairman, the former CEO of Phillips 66 is Greg Garland. He wants a swimming pool, but not just any old swimming pool in Texas. He wants to dam up a stretch of the South Llano River on his ranch 150 miles west of Austin. It would be dammed for recreational purposes. He's hoping it'll hold back 12 acre feet of water, enough to create a swimming pool.
Swimming hole.
Yeah, swimming pool hole.
Yeah. Wait, but it would be a 12-acre swimming pool?
12 acre feet of water. So I don't know what that,
I don't know
big.
how big that is.
It sounds, but it's Texas, so it's big.
But an acre is quite a bit larger than your average swimming pool.
Right? But this is Texas.
Not surprisingly, he's getting pushback from environmental officials. But,
Water is scarce there. I mean, it's serious business. There was a Bloomberg Business Week story on it a couple weeks ago.
Was there? Okay.
Yeah. Water rights are very, very important. Yeah.
How about some car talk?
Oh, yeah. Hannah Elliott is going to join us right now.
She's there.
From Los Angeles. Yep. She is getting ready for this great Pebble Beach
Concours d'Elegance.
Concours d'Elegance. You've been there a few times.
I have never. You've got to go.
I have
it's
never
a bucket list
been.
For you.
And it's like everybody I talk to is like, oh, how can you not go to that? I just haven't really ever had time or been allowed by my boss. But Hannah is, like, it's her job. So she joins us now. Also, I think, preparing to drive a couple of sweet Aston Martins. Hannah, talk to us first about the Concours d'Elegance. And I saw your story about they're building a big barn for some old Ferraris. What's that all about?
It's honestly so exciting and cool. I'm really excited. I've gone for many years, and this is the most excited I've been for a while about a bunch of old, rusted out, completely derelict Ferraris that are for sale. R.M. Sotheby's, the auction house, built a barn display to recreate the way that these 20 Ferraris were found in Florida after a hurricane. You might remember 2004, we saw some pictures of a bunch of Ferraris completely demolished after a hurricane. Now we have the Ferraris for sale. They've reappeared. And they're actually owned by a very eccentric man you might remember named Walter Medlin, who's got quite a colorful history back to the 1970s or so. But these Ferraris are gonna go big, even though they're all twisted and completely rusted out.
Talk to us about the Concours d'Elegance. What is it, and who goes there? Tell us about why it's so special in the world of high-end automobiles.
Okay, well, Concours d'Elegance is a really snooty way to say a car show.
Yep.
And what it is a bunch of really nice, very well washed and detailed cars parked on a putting green and a fairway of a golf course.
And on Ocean Avenue in Carmel by the sea.
Exactly. It's actually on the Pebble Beach golf course. And there is a set amount of cars that are judged, of course, this Q-tip white glove type judging. But then also throughout the week, there are auctions, there are other car shows. thousands and thousands of people come. There's kind of something for everybody. There'll be car shows just for muscle cars, or just for Porsches, or just for, I don't know, old trucks from the 70s. It's really fun. But yes, to your point, the big climax of the week is Sunday's Concours d'Elegance, the car show on the Pebble Beach Golf Course.
Yeah, it's just extraordinary. I mean, this is big business, Hannah, right? I mean, I see stories on some of those cars that get bought and sold during the week, and particularly on Sunday, some huge numbers. There's real investment here.
Yeah, this is kind of like art collecting in a way. We're talking about blue chip collectibles here. So the most expensive and rare vehicles in the world are bought, shown, and displayed. Certainly the auction houses will see easily over $100 million in sales just over the weekend, all told, through 3 or 4 days of auctions. But you have things that, there might be 2 or 3 of them in the world. Some of the racing Ferraris, of course, we remember the 300 SL Gullwings, the Mercedes with the doors that raise up like a Gullwing. So really iconic cars. This is the most prestigious car of it, really, certainly in North America, maybe in the world. You could say there might be a few in Italy that compare, but this really is, if you want to see blue chip cars and the best of the best and the rarest, this is where you go.
We're showing some of the derelict Ferraris here for those people watching on YouTube or streaming us on Bloomberg.com. Some of them look like they're in pretty fantastic shape. Others look like they're about to fall apart from all the rust. But they're still expected, even the one that, Hannah, the one that's completely crumpled and doesn't have a roof or maybe even wheels, even that is going to go for hundreds of thousands of dollars.
Yeah, barn finds are very interesting things. From what I hear, the guys that I talk to, really, if you're concerned about money, it's better to just buy the car already done. These are not especially, at this point, you're going to spend a lot of money to bring them back, maybe even more than you'd spend on a similar car that's already done. So it's really, at this point, it's about the story, it's about the journey. The people who buy, these twisted, crumpled cars are people who love the painful relationship of what it takes to bring a car back to life.
Let me ask about a new car, and that is the DB12. You've already driven the car somewhere else besides America, yes. But you're also going to get some seat time in a couple of Aston Martins coming up. What's the story with this company, where it is, and what it's producing?
Aston Martin is really fascinating this year for a number of reasons. We know that they've really struggled since their IPO in 2018. They've got a very dynamic owner in Lawrence Stroll, and of course, Aston Martin is doing fantastic in Formula One right now, which helps a lot, at least from public perception and probably fundraising too. Of course, Lawrence Stroll's son is a race car driver as well. So there's a lot of talk about Aston Martin. And then when they bring in the DB12, which is a successor to the DB11, excellent vehicle. They've got the DBX SUV, the 707. I think I'll be in during Monterey. Fantastic SUV. I actually think you could cross-shop it against the Lamborghini Urus, perhaps. And you could throw in the Ferrari Purosangue as well if you wanted. So they're making really competitive products, but also they have really, it's been tough. They faced liquidity issues. There's been a lot of financial turnover and executive turnover. Now we also know that they're tied in with Lucid. So there's just a lot going on at Aston Martin. It's a really exciting time, and I am looking forward to having some time with their executives to get the latest.
All right, Hannah, great stuff. Enjoy Carmel, enjoy Pebble Beach, maybe get a little veal at Il Fornaio on the corner of Ocean Avenue there in Carmel by the Sea. Hannah Ellis, staff writer for Bloomberg Business Week. Man, we got to get you there, dude.
Someday,
And you go for multiple days, and as Hannah was saying, all around the Monterey Bay area, including Monterey, out near Salinas, all over the Monterey Bay area, each day there'll be different shows. And it's not just there. So it's just amazing. And then it culminates on Sunday.
I mean, the next best thing for me is just having Hannah cover it, because then I read all of her coverage and get deep in it. So I feel like if she's out there writing about it, maybe creating some video content as well, That's good enough for me for now. And then one day when I retire, maybe.
No, please. You can go out there. I'll make it happen. Don't worry. I know a couple people. We'll have more coming up. This is Bloomberg. Let's get some company news right now. Steve Rappaport.
All shares of Novo Nordisk are down more than 1% after the drug maker disclosed that supplies of its blockbuster obesity medicine Wegovy will remain restricted in the U.S. CEO Lars Fergard Jorensen tells Bloomberg he's not concerned about supply issues.
This is a really unique opportunity for Novo Nordisk. We have seen a tremendous willingness to use our obesity medicine, not least in the U.S., but also in Europe, where we have launched. We have this week announced a set of really attractive cardiovascular data, not yet in the label, so we cannot promote them. So this is just going to push the demand even bigger.
The data Jorensen is referring to is from a study that shows use of Wegovy for obese patients reduces the risk of heart attacks and strokes. A tech giant reverses course in the wave of job cuts plaguing the industry. More from Bloomberg's Kimberly Adams.
Steve, it's a boomerang effect over at Meta. The company is looking now to rehire many people it laid off several months ago. Meta shed 25% of its workforce in multiple rounds of cuts that ended in May. Those layoffs are part of CEO Mark Zuckerberg's plan for what he calls a year of efficiency. Meta, formerly known as Facebook, has picked up pace, rehiring dozens of workers in engineering and technical roles. Steve?
Thanks, Kimberly. Shares of Meta are up less than 0.5%. And business travel, it's continuing to soar. The company CWT and the Global Business Travel Association is projecting that prices will climb even higher this year and in 2024. The report says relentless post-pandemic competition for airline seats, hotel rooms, and cars for hire are driving up prices. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney here in the Bloomberg Interactive Broker Studio looking at these markets. S&P 500 up a third of 1%. Dow Jones Industrials up 0.4%. NASDAQ also up about 0.3%. So giving back the earlier gains that we had after this CPI print, which seemed to come in right in line with expectations, prompting some market folks to say, hey, maybe this will give a little more ammunition to the folks that say, all right, this Fed can stay right where it is, no more rate hikes needed. So we'll keep an eye on that. 10-year Treasury trading at 4.01%. That's essentially unched on the day. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. The U.S. Coast Guard and Navy, 3rd Fleet, plus the Hawaiian National Guard are all mobilized now, helping with those wildfires burning across western Maui. Hawaii Emergency Management spokesman Adam Weintraub tells ABC that the wildfires behaved more like those that you might see in the western U.S., except for one really big difference.
In some of those fires in the western United States, you've got a lot of territory with a long road ahead of you. So when people need to get out, there are ways to do that. We're a small set of islands. There are not a lot of escape routes.
Officials say they don't know how these fires started. Nearly 2,000 acres have burned on Maui and the Big Island. Now that President Biden has issued an executive order limiting U.S. investment in cutting-edge Chinese technology, the U.K. is hinting that it may do the same. Bloomberg's Ellen Milligan has more now from London.
So about 30 minutes after Biden confirmed he was signing this executive order, the UK government issued its own statement saying that it was going to consider these new measures he's introducing closely.
Bloomberg's Ellen Milligan reports Prime Minister Rishi Sunak's government could mirror the Biden administration's approach and will take about a year to implement. Today begins an official mourning period to honor New Jersey Lieutenant Governor Sheila Oliver.
Oliver's body is lying in state today at the New Jersey State House Rotunda in Trenton. Tomorrow, she will lie in state at the Essex County Historic Courthouse in Newark. Oliver died last week after she was admitted to the hospital with an undisclosed medical issue. On Saturday, the Reverend Al Sharpton will give the eulogy during funeral services at the Cathedral Basilica of the Sacred Heart in Newark. Oliver was the first black woman to hold an elected office in the state. In New York, Michael Barr, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Matt and Paul.
All right, Amy Morris, thank you so much. We appreciate it. Well, for all the bacon lovers out there, get ready.
Which is everybody, right?
Pretty much.
Everybody loves
pretty
bacon.
much. Bacon prices dropped by the most in 8 years last month in the United States, but the relief for many meat eaters is likely to be temporary. That's because money-losing hog farmers are cutting back herds. Top pork producer Smithfield Foods this week said it would close 35 hog farms and lay off 92 workers in Missouri. The problem is that people love bacon, but little else of the hog.
Yeah, well, I mean, I have to say, I do my part by eating a ton of pork products.
Yes.
But I am troubled by the way, especially these big factory operations treat.
You can't go there. Yeah, I know.
Treat
but you
the
can't go there.
pigs.
So there is actually, I'm looking at, you got to look at the pork belly market. Pork bellies. Think of Trading Places.
Believe me, dude, I was already there.
USDA boxed pork belly cut 200-pound spot price. This is in U.S. dollars. $204.58. That's up from just about $60 in the last month. So, I mean, just ripping higher here. So if you're in the bacon business, you got to follow the pork bellies. Got to follow the pork bellies.
Well, and you got to convince people to eat the rest of the pig, right?
Yeah.
But I am always happy to pay more if I am somehow convinced that the product I'm buying was treated better than the average product.
Yeah. And I don't think you can even have that argument when you're talking about a lot of these things.
Yeah.
You know, so you just got to, I don't know, you just got to go there. Pork bellies, BLTs, all that kind of good stuff. Keep an eye on the price of bacon. S&P 500 up about 0.4%, holding on to some of the gains we saw earlier on the back of the CPI print this morning. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to take a look at the endowments of some of these big universities. They're starting to report their returns for the latest fiscal year. Janet Lauren, higher ed reporter with Bloomberg News, will join us in the studio, so that's good. Jeffrey Cleveland, principal and chief economist at Payton & Regal. He's going to join the program, talk about that CPI print we got this morning, what it means for the Fed. And then Ian Whitaker, managing director and owner at Liberty Sky Advisors. He's over in London, one of the smarter voices in the media space that I know. He's going to join us, give us his thoughts on what's happening with Disney and some of these other big media companies as, I guess, we all stream more and spend less time with our traditional networks. What's that all mean for the economics there? But first, let's kick things off this hour with Charlie Pelley.
Hi, thank you very much, Paul Sweeney. You mentioned Disney. Shares up after earnings now by 3.3%. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index. And yes, the Russell 2000 all in the green. Russell 2000 barely. Little change there, up less than 0.1%. Bottom line here, U.S. stocks trading well off session lows. Traders are betting that even if the Federal Reserve pauses its interest rate increases in September, policy will likely remain tight to prevent a flare-up in inflation. The S&P right now up 16 points on this CPI Thursday, a gain of 0.4%. Dow Industrials up 160, that is a gain of 0.5%. NASDAQ, the composite index, up 0.3%. The NASDAQ 100 index also higher now by 0.3%. 10-year yield 4.01%, with the 2-year yielding 4.76%. Gold up 0.3%, $19.20 the ounce. And West Texas Intermediate crude down 1%, $83.64 for a barrel of WTI. Today's CPI report is bolstering hopes that the Fed can tame inflation without sparking a recession. Diane Swank is chief economist at KPMG, and she was interviewed this morning on Bloomberg Surveillance.
Even though Chair Powell said, he was not optimistic, he wouldn't use that word at the press conference that we could get a soft landing, he also admitted that the path to a soft landing is widening. Now, the Fed has taken recession out of their forecast. We took it out 2 months before they did, so I guess that's good news. Yeah. But there's still a sharp slowdown coming, and that's, something we'll have to deal with. But over the summer, things are going to look good until they don't.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Disney again up by 3.4% after management of the world's largest entertainment company said capital spending and outlays for movies and TV shows are coming in lower than projected. Recapping, stocks higher, S&P up 17, up 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. Matt Miller and Paul Sweeney here live in the Bloomberg Interactive Broker Studio. We are streaming on that YouTube thing, so go over there and just search Bloomberg Global News, and that'll bring you to the video feed. How fun is that?
Bloomberg Global News.
Bloomberg Global News.
You've got to put in the phrase Bloomberg Global News. No, I'm just saying, I have searched on YouTube, and I can't find it, but for some reason that's a magical phrase. Bloomberg Global News.
I know. I don't know
why.
It's crazy. I learned that from Carol Masser, because they've been streaming Bloomberg Business Week for a long time, so she taught me well there. So, all right, looking at the markets here, up 0.4% on the S&P 500. Let's see where the action is under the hood. Billy Lipschultz, he covers the markets for Bloomberg News, joins us here in our Bloomberg Interactive Broker Studio. Billy, what are you looking at?
Yeah, still seeing quite a bit of weakness for Tapestry after the deal to acquire. The deal to acquire Capri in an $8.5 billion deal. Tapestry down 13%, worst performer in the S&P 500. The biggest driver to the upside, though, Among them is Disney after quarterly results showcasing cost cuts, which will be interesting ahead of News Corp results after the bell today. So getting a bit more detail, Paul, as you mentioned, in your neck of the woods within the media space. One stock that does stand out, though, Yeti Holdings. I don't know if you guys are
huge Yeti fan.
Okay.
I'm a big owner of Yeti products. Full disclosure here.
I've got the cooler. I've got a couple of the tumblers. Stock up 21% right now after better than expected second quarter results, boosting their forecast for earnings for the year. So biggest intraday percentage gain since November, trading at the highest since February. Analysts across Wall Street really praising those results.
All right, it is ridiculous how good those products are. I'll put the water in my Yeti little container, go to the beach. I can barely touch the exterior of the bottle because it's so hot from the sun on the beach. Drink the water, ice cold.
But why is Yeti the only name we know?
Because we grew up with
Coleman,
yeah, all that stuff.
Or Igloo.
Igloo, that's the one.
Exactly. And I don't know if they make the same kind of products, but there are other cooler makers who make, I think, what's called roto-molded coolers, right? Arctic Coolers is one. Orca is another. I'm pretty sure Pelican makes them as well. But
Based
you
in
don't
Austin,
see
Texas.
anything besides Yeti. If you go to an REI, for example, it's all about Yeti.
Well, even if you go to Dick's Sporting Goods or Lowe's and Home Depot, there's an entire Yeti section, wine tumblers, the regular tumblers, mega ones that are like
My brother's
42
fiance has a Yeti martini glass.
You're lying.
No.
She's welcome in the family.
Exactly. It's essential to her lifestyle.
It's a lifestyle aspirational brand.
Well, it's interesting, too. They make backpacks now. They make clothing. It seems like they're really branching out into kind of the mainstream consumer goods outside of just coolers. Because I remember at one point when the stock was trading down back in 2021, it peaked above $107, right now below 50. And we were kind of calling out, like, how many tumblers can a person buy? I mean, my brother's got the backpack. He's got the 12-pack cooler. But, like, other than once you hit kind of...
Now, does your brother also wear a white baseball cap and talk about his frat all the time and have an Old Row subscription?
No, my brother's actually he's in that blue-collar working class, so he's one of the construction guys who has the cooler loaded up for...
You got to have that.
Yeah, they have it too, but I always feel like I risk, if I put a Yeti sticker on my truck or, if I wear the hat, I risk being lumped in with that whole... good old boy crowd.
I don't know.
It's weird.
Aren't you a good old boy?
I don't go to SEC games,
I'd love to go to SEC game.
But I feel like Yeti's interesting because it has that kind of, fraternity vibe, but also the, like, construction, firefighter, police officer.
True.
Yep. Yeah, look at that chart. That's another pandemic chart. Stock, in 2020 just started ripping. Went from like $20 up to $100, and like a lot of those pandemic stocks at the end of 2021 were peaked, kind of been coming down ever since.
Another stock in focus, though, and Matt, I wanted your opinion on luxury, not luxury. Ralph Lauren right now down 2.5%, falling for the fifth straight session after they reported quarterly results that had a light 2Q forecast. Our Phil's call him a luxury brand. Ralph Lauren, luxury or not luxury?
I mean, to my mind, it's a staple. To my mind, it's a sort of staple of the upper middle class, right? And they do make higher end products. The purple label is one. They have RRL, but they don't actually achieve full luxury, I think, because, for example, RRL likes flight jackets and Japanese denim kind of products, workwear sort of stuff. They don't really have the quality that the truly good brands in that space have. They just have the design.
All right, it's $8 billion market cap, up about 18% year to date, and down 2.7% today on that print, right?
Yeah, after those results. Yeah.
Right.
One of the things that I thought was interesting is that they derive more than half their sales outside of North America. So
Really?
Europe
Okay, so
and
that's
Asia
a
making up a big chunk of that.
It'll be interesting to see. I'm going to be really fascinated to see now that China's opening up air travel or loosening it, I guess, a little bit for its people, whether we'll see an outflow of Chinese just visitors and travel. Do they have the same pent up kind of revenge travel?
They did. They're allowing group travel.
Yes, I saw
so they're
that.
allowing like tour groups now to leave China for destinations like the U.S.
So I guess that's a good first step, but maybe we'll be seeing some more of our Chinese friends here in the big city shopping. some of those big luxury stores. We certainly like to see that. Anything else, Bailey?
Hawaiian Holdings down 4%. This all coming after that news out in Maui. So we're keeping an eye on that. Obviously, not a positive update in terms of kind of the news that's coming out of there, but keeping an eye on
that
stocks
story
that are
is
exposed to that.
unbelievable. I mean, the fires. I never remember seeing them, hearing about fires in Hawaii before. So I don't know if this is a new thing, but boy, and just the destruction of that beautiful area. I guess it's on Maui. Crazy story.
The former capital of Hawaii has been decimated.
Yeah, it's just terrible news. All right, Billy, thanks so much for joining us there. Billy Lipschultz, he covers all the markets for Bloomberg News. I want to talk about endowments. I know a thing or two about endowments, having worked on some boards of schools, and for a lot of schools, it's the lifeblood. It kind of supports the economics of the school. And some of these big universities report their endowment numbers pretty publicly. And Janet Lauren, higher education finance reporter for Bloomberg News, joins us here in our Bloomberg Interactive Brokers studio. How did some of these big universities do in this last fiscal year, which I guess ends in June 30th?
Yes. So
Okay.
we'll be starting to hear more school-specific returns coming up in the next month or two.
Okay.
We get a good snapshot. And the median is 8.7%, which might sound like a terrific return, but we have to keep in mind inflation. So while you have to factor in spending and also what schools are paying out in terms of inflation, they're also paying higher costs for everything from construction to professor salaries. They're even paying more in financial aid.
Yep.
So those, it may sound like a great return, but a lot of it is being eaten up by inflation.
I have to imagine financial aid spending has gone way up over the past couple of decades, because so many. I mean, I focus on the schools with the big endowments that you write about. So many of those schools have hardly any students who are paying full tuition.
Well, a lot of the schools have been trying to make a concerted effort, to showing Congress and the federal government that they are attracting lower income students. Harvard said this year 25% of their entire freshman class has an income of $85,000 or below, and they're giving more financial aid for students who are, trying to have a more diverse and economically diverse class.
You like Columbia University, don't you?
Yes, I did go to school there.
I mean, undergrad at Columbia, master's in journalism from Columbia, then a Spencer Fellow from Columbia, which you finished this year. What is that?
So that is a reporting fellowship looking into education reporting.
Everyone who comes in here is so much smarter than we are. I mean, like everyone from Bloomberg News that comes in, I'm just like, you guys killed me. All right, so going back to like your story here, I mean, talk to us about endowments. How important are they to these schools? Because it just seems like, I do a lot of work with Duke, and their endowment's monstrous, and they get great returns. And it's such a big supporter of everything they try to do. But some schools, most schools, don't have that.
Right. Well, and there's a handful of schools that are extremely reliant on the returns. Schools like Princeton and Amherst rely on more than half their entire budgets from endowments. I think in some cases they're 60%. But, when you look at smaller schools, their endowments are smaller. They're in U.S. equities, and, they did much better for their returns this year, given that equities were up about 18% in the period. It just depends on the school. And as, long-term returns were about 6% for the 10-year average, which is not a great return considering inflation and what they're spending. They actually have to earn a lot more in order to keep pace. So, we'll see as these numbers come out how the schools are doing. Last year was a terrible year, the worst year in return since the Great Recession.
But, okay, here's my
10%.
big but here. Alternative investments are, particularly for the larger endowments, are a huge percentage, and it shocks people how much they're putting into hedge funds, private equity, private credit. 40% of their endowment they're putting into these things, which don't have probably more as some of the bigger ones. They don't have liquidity. That's the downside.
But they make returns.
Okay, there's this thing called mark to market. They did not mark to market the down 25% year we had last year. I didn't see it anywhere in the endowments. Why?
But why would they have to? It's not the same as a bank.
No, but it's an endowment, and I would think they would have mark-to-market regulations as well.
I don't believe they do.
I don't believe they do.
I can't imagine
and
why
that's
they would.
why, and it's interesting because I kept, when I listening to the board meeting and Duke, I was like, okay, but what about the 40% we got in, some leveraged thing that's in Zimbabwe or something, some, zinc mine? Where's that?
Well, most of the larger schools, you're absolutely right, are mostly in alternatives. And that was a big shift starting in the late 80s, early 90s, when David Swenson, the late CIO at Yale, decided that schools could get a better premium for illiquidity. And most schools, really the big ones, shied away from U.S. equities. And in some years, it's really paid off. In this year and in years past, you've seen smaller endowments with larger shares in U.S. equities have much better returns. And of course, they're not paying the fees that alternatives command.
Well, tuitions across the board continue to rise, right, Janet? And how long can that happen, especially as it becomes a national issue that people owe so much money in student debt?
Well, I think 20 years ago, we would have been surprised at the price tag that it keeps continuing to rise. Now, however, if you look at the share of student loans, the most biggest share is not actually for college, it's for graduate school, because you can really borrow a lot, up to the cost of attendance for graduate school, which could be, $80,000, $90,000 in a year. For a federal student loan for your freshman year, you're limited to $5,500, $6,500 in the second year, and $7,500 in the third and fourth year. So the biggest share of student debt is really from graduate school. Yes. Yeah, there's limits.
Okay. Dr. Joel Fleischman had $125,000 of debt.
Did he really?
He paid it off in Alaska.
Which is why he had to go to Alaska. Exactly. He went to Columbia Medical School.
That's right. I remember that show.
The show is called Northern Exposure.
Great show. It's now on Netflix. There's a write-in campaign.
I just bought
to get it.
I'd been searching for it for years.
I know.
And I could never find it
And who's the
on
guy?
any
Rob
streaming
Morrow.
service.
He's a guy. I follow him on Twitter because he does a lot of really good stuff, including he's on Billions now. But I follow him on Twitter, and he's saying everywhere I go, people say, "How come Northern Exposure is not on Netflix?"
Now
it's
it
now
is.
on
Now
Netflix.
it is. And I just bought it $60 for the whole first season. It's very expensive.
Really? Oh, can you send that password to me?
Yes, that's right. But there's password sharing. All right. Talk to us about, I've got my last of my offspring, my 4 offspring, going to freshman year in college, a private university. The tuition starts with an 8.
Oh, my goodness.
Exactly. I'm just like, holy cow. And there's no end in sight, is there? To me, it's going to take an act of Congress.
I'm sending
it's
my
just out
kids
of
to
control.
school in Europe because it doesn't make any sense to me.
Well, and when we talk about student loans,